folks, CA Rachana Ranade here and I welcome you all to a very important video which can have an impact on your portfolio, because today we are going to discuss about crude oil. But why are we even discussing about crude in today's video? Because if you are investing in stock market either directly or through mutual funds, I'm sure you must be exposed to these specific sectors like paint sector, tire sector, aviation sector, OMC, FMCG, auto, cosmetics and much more. Now why is this even important for you all? Because you must understand that out of the total cost of the paint sector, 50 to 60% of the cost is because of crude oil. If I'm talking about the tire sector, the story is the same, and if I'm talking about the aviation sector, 40% is ATF, and that is a big chunk of its overall cost. Now let's understand what would be the reaction of investors in few specific stocks if the crude oil prices start to go down. These people are very happy. Why? Because they might have invested in companies which are related to the paint sector, something like Asian Paints, or could be in the tire sector, something like MRF, or it could also be in the aviation sector, maybe something like Indigo. There could be some people who have invested in some stocks which are positively correlated with crude, and these could be people who have invested in maybe something like ONGC or Coal India, and these are the people who might have invested in stocks maybe in the IT sector and which has like zero correlation with crude oil. But if I were to give you some quick examples, just have a look at this chart. Crude from June till date went down by almost more than 20%, but have a look at Asian Paints chart. In the same time frame, it has gone up by almost 30%. Have a look at the MRF chart. It has gone up by more than 31% in the same time frame. And also one more example of Indigo, which has gone up by 23%. But sectors which were positively related with crude oil means what? When the crude oil was going down in the same time frame, Oil India got negatively impacted with down of almost 36%. But yes, there are certain sectors which have zero correlation with crude oil. Just as an example, IT sector. So for example, if you have something like Infosys or TCS in your portfolio, crude oil, whether it is touching its all-time highs or all-time lows, doesn't directly have an impact on the stock price. Well, the entire discussion that we did right now was specifically focusing on stocks or sectors. What about the impact at a country level? You may be surprised to know that India is the world's third biggest oil consuming and importing nation, and in this financial year, that is April 21 to March 22, our spends on crude oil have come to $119.2 billion, up from $62.2 billion US in the previous year. And again, a shocking fact that out of the total imports of India, 20% imports are only and only from crude oil. So I hope logically you have very well understood that if the crude oil prices go up, it is going to have a painful impact on our economy. But if the crude oil prices go down, it is surely going to be a pleasant surprise for our economy. But now that you have understood so many things, the next question which pops up in your mind is that where do I find the crude oil prices? And of course, the go-to website is in.tradingview.com. If you put up in the search bar crude oil, you will find that there are two types of crude oils you will get to see. One is Brent crude oil, which the exchange is shown as ICE, that is nothing but the London Intercontinental Exchange, whereas the second one that you can see is WTI crude oil, which is traded majorly on NYMEX, that is New York Mercantile Exchange. Now, out of these two, I as an individual investor, which one should I be focusing on? So, for that, let me again give you a quick recap. The very first one that we saw was a UK oil, which was traded on ICE, whereas the second one was US oil, which was traded on NYMEX. Out of the total traded volume, 2/3 is constituted on ICE, whereas 1/3 is constituted on NYMEX. There are few more amazing facts about these two. So, UK oil is mostly extracted from the deep water in North Sea, and hence the logistic cost is low as it is directly loaded in ships in the sea. Whereas US oil is extracted from deep wells in land in USA, and then oil is sent via pipe route to Oklahoma. Well, by now, two things are drilled into your mind. One is that there is something like a UK oil and one is US oil. But what are the benchmarks for the same? Brent is the benchmark for UK oil, whereas WTI is the benchmark for US oil. But I as an Indian investor, which one should I follow? Indians follow the benchmark of Brent as far as crude oil is concerned. Even at a country level, whenever we are importing crude oil from any country, Brent is used as a benchmark. So whenever you visit TradingView website, you will see that Brent crude oil is as on date trading somewhere around 100 US dollars. But then the question is that 100 US dollars per what? Per gallon, per barrel, or per liter? Well, the answer dates back to 1860s, where the first oil that was pumped wasn't stored in barrels. In fact, it was stored in any type of vessel or jar that could be found, which made it extremely difficult to judge what quantity you bought or sold, as every jar was different in size. Well, the solution to this problem was found in the 19th century, where inspiration came from the whiskey industry, wherein it was transported in wooden barrels of standard size of 40 gallons. Oil industry just borrowed this idea from the whiskey industry and added 2 extra gallons to cover the spillages en route to their destinations. And coming to the present day, oil is neither stored in barrels nor in any vessels, but it is pumped straight into a tanker or a cargo ship or pipelines, but the concept of barrel has still stuck. So if the price of crude oil is $100, it is expressed as $100 per barrel, and for the math heads, 1 barrel is 42 gallons or 159 liters. And now comes the grand finale question as to what is the exact relationship between crude oil and Nifty. Like I told in the beginning of the video, we import a lot of crude oil. Out of our total imports, 20% of the imports are attributed towards crude oil imports. Now logically tell me that if the price of crude oil drops, then what will happen? Then the petrol price will drop. If the petrol prices drop, the transportation cost will drop, and overall the production cost of any company should ideally drop. If that be so, the operating profit margins will increase and the final bottom line, that is the profit before tax, will also increase. If this be so, this will have an overall positive impact for the company and a positive impact for Nifty as well. On the other hand, if you look at it, if the import bill reduces because of the falling price of crude oil, this will strengthen our current account deficit and our rupee will also appreciate, and these factors will also contribute to a positive Nifty. If I were to show this exact relationship on a chart, it will look something like this. In March 2022, Brent oil had peaked and Nifty at the same time was hitting lower lows. Even if you check the last 3 months, that is from June 2022 to August 2022, you can see that crude oil has been continuously decreasing, whereas Nifty has been continuously increasing. Well, before we wind up, let me tell you that if you start reading about crude oil, you will often come across a term which is known as OPEC. But if you want to know exactly what is OPEC, and if you want to know why OPEC is important for India, I have written a separate blog on these concepts. You can check out the link of the blog in the description box and also in the pinned comment. Simultaneously, if you want to learn more about various other macroeconomic factors which impact the stock market, you can check out my course which is known as Economics for Stock Market on my website www.rachanaranade.com. If you want to learn more about various terms related to EVs, you can click here. And if you want to know more about how India can save trillions of rupees with the EV adoption, you can click here. Till then, take care, Jai Hind and bye-bye.